Hello, fresh grapes with no seeds inside. There is a hot debate going on Twitter, and I thought it'd be interesting to show you how to interpret this so we can see if Bitcoin is an inflation hedge or not. Very interesting, very hot debate because people correlate prices with the narrative. Let's investigate it ourselves. So it all started with one of the influencers, Mr. Pomp, and he has basically infuriated people. No one's surprised because of just, this is very typical Bitcoin narrative language, okay? So we're going to read this together. Because Bitcoin is the best inflation hedge in my opinion. Many people incorrectly stated that Bitcoin failed as an inflation hedge last year, but they missed what was happening. Here is how I think about it. So we don't need to go on about it, but the fangs are out. So Mr. Main here says straight away, price is not, let's read this together. Price is not nearly high enough for you to be spewing this trash. He's basically saying that is just a BS talking point, and it's usually a market optimism, belief, euphoria signal. That's when it starts coming out. We're the inflation hedge. And he also mentions he just takes a stab at him. So, go back to shilling until we're at higher prices. So what I've noticed is in assets, when they go high, we invent narratives. And when I was much younger and I had no idea about this game, I used to think to myself, being naive, I'm like, oh, I would never believe any narrative. You can't convince me of that. But now when we're in crypto and we're long, it's so easy to believe the narrative that they're going to do infinite money printing. Because that means you should never ever sell anything at any price because they're just going to keep printing money. How did that work out for us in 2022? Not very good. Not at all. You may also make the case that, well, they'll never be able to hike rates that fast ever again. I'll say that's true, but you go off the emotions, friends. You don't go off trying to predict these actions, these things that happen, the Fed raising rates, or what CPI is going to be, or is there an explosion going to happen somewhere? This plays out in the stock market as well. So very interesting, right? They start attacking each other here. We're going to go through, okay? So we're just going to see, look at this. Mr. Puffy asks as well, he goes, if you're long in an asset to hedge your portfolio and it drops 80% in the conditions it's supposed to hedge for, is the hedge successful? All right. But then, Luke goes back and says, well, Bitcoin was up 600% when the inflation hit 7% first. So the market was front running it. Luckily for you, I have a beautiful, sweet orange Bitcoin logo here, which will be zoomed in and then zoomed out, and we're going to delete it. So this is the Bitcoin chart, and we're going to go through some stats together. We're just going to see the charts. Is what they're saying true? You're going to be pretty surprised, right? So this is just what I've got here is US CPI. So you can see, I'm going to zoom in for Bitcoin, right? They're just saying, well, inflation went high. So if we look at this area, that's what they're saying. They're saying, well, inflation went high and then Bitcoin went down. But look at the area they're looking at. They're looking at here, okay? Looking at here, Bitcoin went down. What about this part? Right? Let's go draw another rectangle. What about this part? Inflation started going up and we went up. That's something to think about. But the main point, even besides that, is that, because this is markets are forward looking, and you can go back in history and you can draw other conclusions too. This is why any conclusion you draw is probably going to hurt you most of the time. Because back here, look, Bitcoin, let's do this first drop. I'm going to go down to the early days. Yeah, Bitcoin dropped 93%, but core inflation here was only 2.3%. It was nothing. So you can say here, hey, inflation was low and Bitcoin dropped 94%. Does that mean low inflation is bad for Bitcoin? Okay. So what about this other one? Inflation dropped here, friends. Inflation was down to what? This is core inflation, by the way. So we're looking at this number here. Core inflation was down to 1.5%. And look, we had Mt. Gox, right? So Bitcoin dropped 85%. So you could say, oh my God, like low inflation is really bad for Bitcoin. You could conclude that. You say, well, this is bad. Something to think about. Because look, you can draw any conclusion you want. People just make up stuff. And what we're really doing is we're describing the candle color. That's all everyone's doing. That's why I always make videos about the candle color. People think I'm joking. No, I'm actually telling the truth here. whatever the color you're seeing is, if it's green, people will invent any narrative to be bullish. And they'll put any correlation together. And when it's red, we will do the opposite. People will look for reasons to sell. And look at this. Bitcoin once again dropped in this cycle, 2017 to 18, after it was done, dropped another 85%. And inflation was down 1.5% for this core inflation. How about that? So it's something to think about, friends. So yeah, we had this high one, but you could easily just go back in the past and say, well, it dropped when inflation was low. Therefore, it's not really good at anything. And it's very hard with these asset classes because we know money's just a meme. We can look at other stuff too, right? I have even the Fed funds rate. You can go, oh, well, what about the interest rates, right? And what was happening there? Well, you could easily just conclude that interest rate hikes are damaging. But look, if you go back to that first cycle again, you go, well, inflation, the interest rate was going flat here. They were holding rates back in 2011, but we still dropped 93%. So you could easily say, well, a positive inflation rate, positive Fed funds rate is bad. We need like negative rates. You could easily have made that case back then. Having a look at the data, you'd say, well, Bitcoin drops and the interest rate set by the Fed is a certain level and the inflation is a certain level. We need it to be a different number. We can always draw these conclusions. They don't get you anywhere. One of the strongest things you can do is just have a look at the stock market. This is the S&P 500. And it's crazy because the correlation is very high. And people don't know how to interpret it. The correlation's high, but when you look at it from a bird's eye view, you can see the stock market is only propped up by money printing. You can track it with M2. Which is fascinating because a lot of people who are boomer stockholders, they believe in the narrative that no, it's American businesses that are creating value and that's where all the money's coming from. But I've shown you many, many charts where just the S&P 500 just tracks M2. It's nuts. It's really nuts, right? Going back even 100 years, the growth rate of M2 was like 5 to 7% and the stock market is like 7%. You're barely getting anything on top of the M2 money supply. It's crazy when you think about it. So there's so many moving pieces here. You're thinking, okay, what can we actually rely on? What can we rely on as a signal? And the answer is just the crowd's emotions. Because the Fed does not intervene in crypto. It doesn't. That's the only thing we can go off for now. Now, I'm not stupid enough to tell you that we can always do this because one day we won't. The market's getting more mature. It's going to evolve. This is going to be the hardest part. And there's no way to really spin this. There is no easy answer to this. You have to take a long-term view. And of course, if you're listening to me, Bitcoin is, yes, it's slowing down, diminishing gains. But the ultimate story of crypto is it's meant to be a parallel banking system, meant to be outside, yes. But you can't program away people's speculation. You can't. Because money's just a meme. And we know, so I always used to wonder, why? Why does this happen? Why do we have these such vicious collapses? Why can't we actually take it out? Well, the answer is liquidity. Because in any market, the bids are only about 3% to 5% of the entire market cap. Let's just write 4% of entire market cap. And we're going to write here, bids. It's actually more like 2%. Actually, no, you do bids and offers. Think about that, friends. You've only got 2% of an asset or a stock or a security of the entire market cap sitting there on the bids. The bids are people down to buy. So effectively what we're saying is, I'm going to remove this. Effectively what we're saying is Bitcoin down at 18 to like 5K. That's all you got. You got 2% of the bids. So if, let's say Bitcoin's market cap was 500 billion, it would be, 2.5 billion. Maybe you double that up to 5. But it doesn't even really matter. It's tremendously smaller. I mean, we could even change the number and just make it more conservative. We could actually write, bids equals, make it like 10% of the entire market cap. Let's just make it super thick. This is a very, very thick amount of bids. That's very hard to deal with because that means, friends, if you're on a boat with 10 people, so 9 other people, there's 10 of you, it just takes one person and everything gets influenced. And I mean in a big, big, big way. It just takes 10% of people to quit and you get something like this. If everyone quits at the same time, it's vicious, friends. It's vicious. This is actually how they move. That's how thin markets are. But also you're dealing with humans' perception of value. So yeah, it's scary to think, oh my God, if everybody rushes for the door at once, it's over. That is scary on one hand. But on the other hand, I'm letting you know, we have like 100 plus years of data of how humans value stuff. We don't just give up and throw in the towel. There's always people bag holding and there's always people who are looking for the optimistic side of life. And you can see this from, like even gold holds its value when people are like fleeing a country in war. If people have gold, they won't give their gold away for like 70, 80% off. Very interesting. So humans, our perception of value, especially in crypto, is going to be more and more relevant to help you build your conviction. So yeah, you do see this argument, is Bitcoin an inflation hedge? It's not so easy to look at it like that because the markets are always forward looking and they're thin. That's the part that's going to confuse you. We're so thin, man. Good thing is we could be thin on the upside as well. Like, woohoo, maybe we do that. Wouldn't that be fantastic if we actually did something like that? So how do you really interpret this? Well, at the end of the day, you don't have much to go off. You don't. All we have, the only thing that actually we can like reasonably say predicts Bitcoin cycles and crypto cycles are the 4-year halvenings. That's all we have. And I'm also, if you go down the risk curve into Ethereum and altcoins, you'll be able to, you can tell the emotions are there, friends. You can see people make the memes. They're more expressive. There's coffin dancers. There's a lot of things that happen when the crowd's euphoric in like a brand new coin, brand new sector. And we don't know how long that's going to be. Because at the end of the day, I mentioned to you before, I reiterate now, the Fed is intervening in everything. The stock market is not allowed to have a proper cycle. I'll put the Dow Jones here. This is the lifetime Dow Jones. I'll put it on a linear chart, linear weekly. I want to show you this. This chart is the exact Wall Street cheat sheet from the Great Depression. So have a look at it. Have a look at it. You can even make this transparent if we wanted to. We can have a see. Look, it's exactly, friends. It's the Wall Street cheat sheet. It's the Wall Street cheat sheet. And if I put it down to, this is a monthly chart. If you put it down to weekly, you'll be able to see as well. It's really cool to see this. I really love looking at these things. And so we have it here. Look, you can see there was euphoria. And what happens is the market just capitulates in the Great Depression. And this is exactly what crypto does. It's fascinating, right? So what we enter next is the depression, which was FTX. And now what ends up happening is this is what I mentioned, what part of the cycle we're in for crypto right now. We have hope and then disbelief crashes. And then hope and then disbelief crashes. And then hope and then disbelief crashes. That's what it is. So the hope part is when you it starts off in disbelief, right? Because you don't know, you're still in the depression. It starts off in like, oh my God, nothing's ever going to work again. And then you go up and you're like, oh, we're recovering. And then, oh crap, I'm in disbelief. We're never going to rally again. And then you're like, what the hell? How are we rallying? The economy's still doing bad. This is actually, friends, this is funny. This is World War II. This is World War II right now. 1942, 1946, right? And then it turns into hope and then disbelief again. It's exactly what crypto is. But the stock market today is not allowed to do these shapes. It's not allowed. I'm not here to argue whether it's good or bad. I don't think society would run well if we just let these crypto cycles happen for everyone's investments. However, you know what we're seeing now play out in real time? What we're seeing now play out in real time is because crypto does not get saved, it gets stronger every cycle. So yeah, you know, the Bitcoin, if you go down to a weeklies, yeah, it does look like the Wall Street cheat sheet every single time. We have euphoria, depression every single time. But we're hoping Bitcoin continues its path of lowered volatility. Because if it does do this, it will show you that a free market and the libertarians have a point. So the whole idea is, hey, we're suffering now for volatility and all this uncertainty, but eventually the volatility, we're not going to do like 85% drop. We're going to do like maybe a 50% drop from 160K down to 80K, whatever that number is. You like that? Say 190 down to like down here. That's what ends up happening. That's hopefully, that's why crypto is so risky. But on the other hand, if this works out, now you know why you've been so far compensated for the risk you took. Because we have never seen this ever play out in human history. After the Great Depression, it was so traumatizing. The Fed said, well, and the governments too, they go, that's it. Whenever we get squashed, we're just going to stimulate, we'll steal people's purchasing power, we'll tax them here and there to get everything going again. That's the difference here. So what can we really do, man? Maybe we play for the next Bitcoin cycle. Maybe we pay for the next Bitcoin halvening. So if you're new and you're listening, the Bitcoin halvening is going to happen around the first quarter, so March of 2024. It's going to happen around here. Traditionally, we peak, we do some sort of euphoria 12 to 18 months after. So if we go to 2025 March, here. I know it doesn't look like much. These are monthly candles. So this is basically potentially where the euphoria is. Right here, we're going to have a cute little emoji. Do a cute little monkey. So euphoria is where all the apes come out. Traditionally, that's what happens. We have nothing else to work off at all. Like at all. Like, because I've just shown you at the beginning of this video, I showed you, well, people are saying Bitcoin's not an inflation hedge because we went down when inflation was high. You know, but what if, sir, friends, baby dolls, sirs and madams, what if Bitcoin was meant to go 85% down, but because inflation was so high, it stopped at minus 77%, which is what it did. See how it's all about perspective? So I could say to you, well, you know, like perhaps instead of dropping to $10,000, that's why we only stopped at $15,000 because inflation was so high and people were like, hey, we're going to need this. The thing's going to get worse, right? But because we're seeing red candles, you can make up any story. Any story. And when you talk about a hedge, what's your time frame? Because there's a cost. So everyone has to really, as soon as you like start talking time frames, then you can throw anything in the water, you know? Like I can say, oh, you didn't hedge me and you're down for one day, right? Or you did hedge me correctly, but you bought the lows in a bear market, right? And then you're not a proper hedge compared to another asset class in 3 years from now. You can mix and match it any other way. All we can go off are these human emotions while the Fed doesn't intervene in crypto itself. It might get tricky if crypto keeps correlating to the stock market, because that means when the stock market capitulates and they print us out of misery, we will start having their chart patterns too. So the stock market chart pattern is what you saw here. You see in the zombie virus, right? Remember, this is supposed to be a black swan, unlikely, okay? So the zombie virus was like, oh, we're trundling along, and then, oh no, it's over, and then, okay, let's continue. That's what the stock market pattern does. When I showed you the Dow Jones in the Great Depression, that was true euphoria, and you go down forever, hope and disbelief. We're not allowed to have that in the stock market anymore, and economies are not allowed to do that. It's according to the Fed, the policymakers, the governments. So that's why it's so uncertain going forward. If we keep correlating to the stock market, what if we just never go into a proper depression ever again because we're getting stronger and they're printing us out? Something you have to think about. Really, at the end of the day, all we can play for maybe is this Bitcoin halvening. it's going to be so hard, friends. It's going to be really hard. I know this sounds disgusting, but I almost hope in 2 years from now, Bitcoin's only 50K around this whole year. I really hope so. Because that means we don't have to get out at all. And we're like, hey, the cycle's broken. Something's different. Because in the stock market, statistically, you are always better off just holding on average. Holding. Everyone's trying to time the stock market. But as you can tell, people always screw it up. Because the volatility isn't that great. But in crypto, if you can sell, you buy back in, you can buy things minus 50% to minus 80% cheaper. So we're going to keep playing for this. If anything changes, we will be ready. But for now, this is literally all we have to go off. So many variables can be thrown in. And just because a monthly candle color is green or red or blue, we're not going to change our thesis. We're staying long because ultimately we bought in the depression. So we're going to wait until the euphoria. Tell your mummy, love her, friends. I'll catch you next time.